All right. Hi, everyone. Welcome back to PKFX YouTube trading channel. So this is a very quick trade update, and it has been pretty difficult for this particular week as I've taken two back-to-back losses now. I entered another trade, Euro USD, that also turned up as a loss. Euro GBP is a loss, and AUD USD is currently technically in a loss, and I believe the uptrend is going to continue. Most probably hit the stop loss as well, because the trade that we took over here was a counter trend trade. However, it is important that I journal this properly, because a loss, if you treat it just as a loss, then you are not really learning anything from it. And if you're not learning anything from it, you will keep making the same mistakes again and again, and you wouldn't be able to implement any sort of lesson learned, so that you don't repeat the same mistake in the upcoming trades. So I would like to see what exactly that went wrong, and what was the reason behind these losses. So to start off with, Euro GBP, over here, this particular trade, actually this was a pro trend trade. The weekly, the daily, and the 4-hour was all in a sell. In fact, this is the 4-hour lower low, and this was the lower high, and the market made a significant pull towards the upside, and it showed me some sort of a rejection over here, and I entered the trade. If I go down to the 30 minutes candlestick, I did mention previously that for this particular trade, I was wicked in slightly at a higher high of the 30 minutes candle. So this was the shift of structure. Actually, from here, when this candle broke, it broke this line over here. So this was actually the shift of structure, a pullback and another push towards the downside. So I was expecting some sort of a week over here, but the market closed above here, shifting from a sell into a buy. So this became a higher high, higher low, higher high, and another higher low here. So this was technically 30 minutes candle was a buy, which made me worried, but eventually it turned back into a sell, making this the lower low, and this was the lower high. And eventually the market was ranging. What happened is over the weekend, when it closed and when it opened back again, it made a tremendous push towards the upside, and eventually later on this kind of died off and it pushed towards the downside, right? So if I go to the 4-hour candlestick pattern, this was the last video that I recorded, where it was pushing towards the downside, giving me the confirmation that, hey, the market is going to indeed continue to trade downwards. However, the next very candle that printed out actually was even stronger bullish engulfing candle that engulfed 1, 2, 3, 4 candles, just like that, right? And then eventually it made another major push towards the upside, and I got wicked out over here, right? There is no way that I could have set a stop loss this big, because the risk to reward would have been 1.36. It's no longer a profitable risk to reward. So I don't mind getting wicked out if this is the case, but if the market is going to continue to trend downwards thereafter, then it's kind of sad to get wicked out only for the market to trend towards the direction, right? Ideally, if you want to take a loss, you want to make sure that you're completely wrong. And in this case, I would still count it that I was completely wrong, because now technically the 4-hour is no longer a sell. The 4-hour has already shifted. The moment this candle closed above here, should be now technically this is the new higher high, and this is the new higher low. So let me just adjust this very quickly. All right, so I've adjusted the higher high, 4-hour higher high, and the 4-hour higher low, changing the 4-hour sell into a buy now. So technically the 4-hour itself shifted, and I got wicked out. But since the 4-hour has already shifted, the market now, it's probably going to move to the upside. If I go down to the 30 minutes candlestick, I thought the market actually was coming back down. In fact, this candle closure over here shifted back the huge buy momentum in the 30-minute candlestick back to sell momentum, and then this move up here changed it back again to a buy. So the market is pretty much zigzagging, I would say. And if I were to look at the 4-hour candlestick pattern, it is essentially ranging over here at the area of interest. I don't know if it's going to break towards the upside or the downside, so I'm not going to enter any other trade thereafter. I'm going to let the market show its hand first. Eventually, my expectation was the market to come down here, go back up here, and push it back down. and that's what the market did. I entered over here thinking this is the push down, but maybe it had to weak me out and make the liquidity grab before it is going to eventually break down. Now if the market breaks again below this 4-hour EMA, all right, and the round psychological number as well, then maybe there's something to look at, right? But for now, I'm gonna just stay clear over here. And the important part is documenting this particular trade. So I've clearly mentioned over here for EURGBP, right, the particular result for this trade, right? So the result, the market initially had a strong 4-hour sell engulfing candlestick in my direction. However, the following candle formed an even stronger 4-hour bullish engulfing candlestick that engulfed the sell candle itself. I was referring to this particular candle, right? So even though I got a strong engulfing engulfing sell candle, an engulfing candle can always be engulfed back again with an even more stronger candle. Usually this doesn't happen, so this is like, for me, I'm looking at this is pretty rare for a very strong engulfing candle followed by an entirely stronger, even more stronger engulfing candle. Most probably this is news driven, but this stronger engulfing candle clearly invalidates the sell engulfing candle, and thereafter this spike, right? So after that, I updated over here that the market thereafter rallied strongly to hit my stop loss, and I did check, and there was actually some euro induced news. So this was news driven, so there's nothing much I can do. So I'm purely going on technical basis. When something fundamentally happens and the market fluctuates in such an order of magnitude, I'm taking the stop loss. I'm fine with it. The 4-hour shift of structure already at that point of time. So from a sell, the 4-hour changed into a buy, and I was completely wrong in terms of the direction. So there's nothing much to do. We move on to the next trade, and that's what I've journaled over here. Now the next trade, AUD USD. Now this trade is still currently going on, so I cannot conclude anything yet, but looks like the 4-hour candlestick, if I were to zoom in, right, the 4-hour candlestick over here is still intact. It haven't really broken yet, right? We can see this clearly, but most probably it's going to break above and hit the stop loss. I'm not expecting it. Obviously, I want the counter trend trade to work out, but it doesn't seem to be that way. The 4-hour EMA has been still holding on strong, but we will set this particular trade and we will let it play out the way it should play out, and there can always be a chance for a tremendous pushback to the downside, and if that happens, great, right? So I'm gonna leave this trade as it is and see how it plays out over Thursday and Friday. And then I took another trade, Euro USD. Now here, this is a trade that I want to document the lesson learned, purely because I believe that there is a mistake over here that I took, and I could have avoided this particular loss, and I'll explain clearly why I took this particular trade, right? So this particular trade, the weekly was a sell, but the daily and the 4-hour was a buy. So if I go to the weekly for this particular trade over here, right, I saw that the weekly candle, right, it had a push downwards, and then it had a doji closure and another push upwards the previous week, and it closed slightly above this area over here, which was acting as my resistance turned into a support. So because of this candle closure over here, the next candle, even though it opened and it was pushing towards the downside, right, I thought it's going to create like a wick and eventually push towards the outside, expecting this weekly area over here to hold as a support. Unfortunately, this is still acting as a resistance, right? If I really look at it, it is actually pushing from the downside, and even though it closed above, it only closed above slightly. So technically this can still be adjusted, that the zone over here, I can always push it all the way up here as well, right? So technically it can be adjusted if I want to adjust it properly, but I choose not to. Any small closure above doesn't really count, right? So if I go to the daily candlestick, the previous day closed as a doji, and the next day candle also was showing me that some sort of reversal is happening. Unfortunately, I did overlook. I have to agree that I did overlook, because I saw the overall trend was a daily buy, and the daily EMA was holding as a support, and I believe it's going to continue its trend upwards. And if I look at the 4-hour, was also at that point of time was a buy. So this was technically the higher high, and this was technically the higher low, and the 4-hour EMA was also coming up. It did break but the next candle that was printing towards the upside. So I was expecting some sort of push towards the upside, and I thought, hey, similar to how it has closed slightly above, maybe it's just closing slightly below, right? But the mistake that I did over here is I looked at the 30 minutes candlestick, right? And this is exactly the reason for my entry, because I saw that the 30 minutes candlestick was printing pretty much, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, right? And it broke over here, right? Technically, this was a buy, which eventually changed back into a sell. So this is the lower low, another lower high, another lower low, right? And then at that point of time, it made pretty much sort of a higher high, not so clear over here, so I waited patiently, and then it created another higher high, and this was a clear break. So at this point of time, right, this was the new higher high, this was the new higher low, and this was the reason I was interested to enter the trade, because I saw an inverse head and shoulder in the 30 minutes candlestick and a clear shift of structure back to a buy. So I thought, hey, the market is indeed going to hold this area as a support, right, and it's eventually going to rally. The mistake that I did is I tried to buy the pullback over here because I was looking at a 1 to 5 risk to reward. So maybe a part of me was the greed in me was kicking in, because it was a really good risk to reward ratio. Ideally, what I should have done was to allow this market to play out, break above the EMA, break above the round psychological number, break above this area over here completely and close above, and then buy that pullback that is still above the round psychological number, right? If I do that, then I'm only getting a 1 to 2 risk to reward, right? So at this point of time, I'll have to admit that it was a stupid mistake, right? Because I saw with a 20 pips stop loss, I can get a 1 to 5 risk to reward. I jump in the gun and I entered the trade expecting the market to do this. But that's the thing, right? Market is always probability basis, and an inverse head and shoulder in a 30 minutes candle is not as strong as having an inverse head and shoulder in a 4-hour or daily candlestick, right? The higher time frame is more accurate, and I gotta understand that the 30 minutes candle can always shift back into a sell, which eventually what it did tagged me in. It was buffering, I had hope, but eventually it just dumped back down. And the point of entry is another point that I would like to highlight. I actually waited until the market closed and the negative swap reflected, and then when the market opened and the spread became bigger, I waited until the spread goes down, and I entered this trade early morning once the spread was down. So technically that was Asia session, but very, very early Asia session, right? So the volume did not kick in yet, and the moment the volume kicked in, it literally just dumped down. I was essentially buying into resistance. We should never buy into resistance. So this was a silly mistake. I would say that this is one mistake that cost me dearly. And if only I waited for the market to close above and I allowed myself to actually go to bed and then wake up the next day, let the Asia session play out, and I would have woken up not even taking the trade because the market has already dumped, right? The market never really came back up. And at that point of time, I would have realized, hey, the market is pretty weak over here. The market is essentially getting rejected over here. Why am I trying to buy into resistance? I should buy into a support, meaning to say, I should buy this bounce, not once it has already broken down, right? This was the plan. So why did I deviate from here? This was the plan. I wanted the market to come down here and then buy this for a 1 to 2 risk to reward, not see the break happening down there, having a 4-hour candle closure below this area, changing this into a resistance instead of a support, and then looking at this particular candle closing like this, thinking that it's gonna fly back up over here. That is not sufficient confirmation for me to go in, yet I did that. So that was a mistake from my end, and I deserve this loss, right? So as I can see that after the market literally just dumped, changing the 4-hour into a sell. Now technically, this is now the new lower low, and now this will be the new lower high, changing the entire 4-hour into a sell already. So it shifted the entire thing. So the whole trade now technically did not even play out, right? So I gotta journal this properly so that I do not make this mistake anymore. And that's exactly what I did, right? I mentioned clearly the losses that I've taken, and it only took me 7 hours and 30 minutes to play out, and I took the full stop loss here. And I mentioned clearly, right, what can go wrong. This is the sad part. I know what could go wrong, and that's exactly what happened, right? So what could go wrong, I mentioned over here, technically the 30-minute shift of structure happened below the area of interest, so have a chance to continue to rally down and hit the stop loss and change the 4-hour from a buy to sell. I literally typed this down and it happened. Also, I waited for the market to open back at 1 a.m. my time. So I was waiting, I was screwing up my sleep, and I was waiting for the market to close and the negative swaps to all play out and the market to open back again. And then the spread was bigger, so I was waiting for the spread to go smaller. All right, so I was avoiding all these things. So also, I waited for the market to open back at 1 a.m. my time to avoid the negative swap and high spread. Ended up buying in Asia time, right? So market did what the result was, market did exactly that, and the shift of structure back to the 30 minutes to sell and hit the stop loss directly. Lesson learned: never buy into resistance from below the area of interest. This is not worth it, regardless of how attractive the risk to reward. Even though in this case it was 1.5, regardless of how attractive the risk to reward is, it's simply not worth it, right? The probability to get rejected from resistance is high. Never do this again, even if it has high confluences. Like as per my strategy, it had 100% confluence rate, which was indicating me to enter the trade. So I just closed my eyes and went for the trade without realizing where the position of the market is. So take it as this trade was never your trade. That's the best advice that I can give to myself, right? Take it that it was never your trade and move on to the next opportunity. The right thing that I should have done was for the 30-minute candle to close above the EMA and above the RPN, right? Adding this into confluence to go for a 1 to 2. I was greedy, so I recorded this exactly so that I do not repeat this mistake again. So this was a complete stop loss being hit, and I've already taken 2, most probably going to take 3. It's sad that I had 3 winning streak and now it's going to go to 3 losing streak, but that's what trading is. As long as I'm building the data and I'm learning from these lessons, it's great. So that's pretty much it. That's the update. 2 losses, and I'm going to let the AUD USD to run. Regardless whether it's going to hit my stop loss or take profit, I'll see how it goes. All right, thank you so much guys, and have a good day.